The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks, and I've started the show out with the advanced decline line, showing you what happened last Wednesday when the market had that explosive, almost 300-point move in the Dow. It only lasted 2 days, and if the market now goes back below the low we made on the 8th of June, this is going to be a very, very negative sign. If we get below 2086 in the S&P futures, this would be a very, very negative sign, because that means that cycle that was there only lasted 2 days, and it primarily looks like it might have been, short covering. But every time the market gets down a couple hundred points, buying steps in. We're down about 120 or so in the Dow right now, so we'll see how things happen after the opening kicks in here. Now, first thing I do when I get up in the morning is I check Bloomberg just to see, that the world has not come to an end, that there's not been somebody else exiting from Euro or whatever, just to see what's going on. And I was shocked to see that Colt Industries was filing for bankruptcy. As most of you know, I live in Tucson, Arizona, the hotbed of Western civilization, the old cowboy country, so to speak. And we have a very, very interesting gentleman who is one of our neighbors. He lives not too far away from us, that we met about 7 years ago. And I really have to tell you about this, because it's really part of our history in Arizona. His great-grandfather migrated to Arizona in the early 1800s. Tucson was founded in 1865, the same time that Tombstone, Arizona, which was a big mining town, was founded. And at that time, Tombstone was bigger than Los Angeles, if you can believe that. And of course, now Tombstone has about 8,000 people, and I think LA has about 18 million. But anyway, this gentleman that we met at the 4th of July party, he was a member of the Cowboy Hall of Fame, and a nice fellow, big, rough-looking cowboy, and he looked like he played the part. He was dressed like a cowboy. He invited us to come over to his house to, see some of the memorabilia that he had. And folks, you have no idea what I saw. I mean, I was totally blown away. We've been there several times, but on going into the house, he took us into his den first, and up on the wall was a Henry repeater, a rifle. This was the gun that was the first one that used lever action for the Civil War, 1865. And I said, boy, that is really one of the best replicas I've ever seen. He said, that's not a replica. He said, that's a Henry, a real Henry. And he showed me the box that it came in, and there was another box with another Henry in it that his great-grandfather had gotten from Mr. William Henry himself back in 1865. He also had a collection of every single Colt pistol that Samuel Colt made, from a 17 caliber all the way to a 45 caliber. That was just amazing, the collection that he had, and all the pictures that he had of the presidents. He had Reagan, Roosevelt. I mean, it was not Teddy, but Franklin, and he could have had Teddy without any trouble. It was Franklin Roosevelt and Gerald Ford, Nixon. I mean, it was just Kennedy wasn't in there, but it was really amazing, the pictures that they had of all the people that were involved. But it was really amazing. And when I saw that Colt went bankrupt, I was shocked, because I remember the quote that's famous for Sam Colt, and it says, "God created man equal. Samuel Colt made them equal." And that's primarily what it is. In Arizona, you can still wear a handgun into a restaurant or a church. You can carry a weapon without any licensing at all. If you want a concealed weapon, it costs you $50. So we honor our guns, and the amendment that is so important to us, the Second Amendment. So I hope that we keep that for a while, because it's very important, to have some freedoms left in the country. Let's talk about the markets a little bit. I started with the New York Stock Exchange advanced decline line. As you can see, this looks very, very, very bad at this point, and whether it's going to continue down or not, we have to wait and see if the market's going to go down a little farther or not. We have a real interesting situation in one of our favorite commodities, and that is the gold market. If you'll give me a second here, I wanted to bring that up because we are trying to make a 135 pattern to hold in the gold. We're trading a little above the line right now that comes in at 1163. If we get below 1163, folks, it's over. This is the very last stance that we have in the gold and silver. Just literally at the point where it cannot go any lower and still be bullish, based on what we're looking at from a technical perspective. Now, silver is in the same situation, but it's even a little bit more bearish, but it's still trying to hold. And I'll put the silver chart up because it's got a chance, but it's really at the point where your fingernails are hanging on, and sometimes I wonder if they're going to slip off. But boy, I'll tell you, this silver certainly doesn't have any power to the upside whenever it starts to rally, which is usually pretty good. Now, there's a lot of talk about the stock market and everything of what's going on in the market and stuff like that, but that's not where the real problem arises, folks. I wanted to show you this chart, showing you what debt we have here with what quantitative easing has done. You can see what's happening to Chinese debt in their credit boom over the last 15 years. They've gone from 2.1 trillion to 28.2 trillion in consumer debt and financial debt and stuff. This is a bubble beyond bubbles. You don't see this stuff out there very often, but this is where the problem lies. It lies in the bond market, and that's where the real problem arises, in my opinion. We got bonds pretty strong today. They're up better than a point. Notes are up better than a half a point. So we're at a point where these things look like the interest rates are dropping, which they are because of the short covering. These things have been going higher. Interest rates have been going higher. Bonds and notes going lower for the past 7 weeks. So we're bound to get a little bit of a pullback, coming into this move that we're looking at right here in the gold and silver and the other things that we're keeping an eye on here. We got the NASDAQ is making new lows here as we get ready for the opening here. About 15 minutes to go. And the NASDAQ opened last night, which is interesting because I happened to be up watching the opening of the market, and I wanted to share that with you if I can find it, and I know I can because I just had it on my little fingers. And where did I put that thing? Oh dear, that's not it. Give me a second. Yeah, the second is up. What am I going to do? Ah, found it. This takes a little time. I might be old and slow, but I am going to be able to make it in time. So give me a second here and we'll be able to see this. Uh-oh, that didn't work. Okay. This is not going to be a very big picture, but at least you'll be able to see what happens. You'll know, most of you that are trading the markets already know what's happened. Oh dear, that's not going to work. I can't get it to expand and I don't know why. Ah, there we go. This takes a little bit of time, you technical wizard, you. All right, you can see here what happened here last night around 6 o'clock New York time. The NASDAQ opened at the 786 retracement. We spent almost all night trying to get up into that gap area at the 440 level, and now we're breaking down below that 786 retracement. That sets up a possibility of a very large ABCD move to the downside, taking out the lows. We're not very far away. 390 is not too far away, so this is something that could be really exciting here. We might get a day where the Dow's down about 250 points, taking out those old lows, and we will see if that's going to be the case. But the real problem, I know stocks will catch cold, but the pneumonia, the patient that's going to have pneumonia is the bonds and the notes and the junk bonds. Those are the ones that therein lies the problem on these things, and you've got to be aware of that, because that's where the real problem lies with some of this stuff. And I wanted to put the junk bond chart in here for you to take a look at it, because you can see it's finally started to roll over a couple weeks ago, and now we're cascading down just like we are in the bonds. However, the last few days we've had a little rally here in the treasuries, but the junk bonds have not been able to rally. One of the things that I listened to over the weekend was a very smart gentleman. I don't know what his name was. He was a PhD from either Yale or Harvard or Princeton, someplace like that. I don't know which one of the Ivy League schools it was, but he talked about the fact that the Dow Jones transportation and the Dow Jones utilities theory is no longer valid because of all the things that have happened in the world with the internet and all the other stuff, that these were just really old indices that didn't really mean anything. Well, maybe so. He might be right. But we have to wait and see, what's going to happen with it to tell us if that is, in fact, really going to be the case. Commodity prices are really getting whacked again. Wheat has broken badly. We're now trading below, the magical $5 a barrel bushel level in wheat. Soybeans, November soybeans have now broken below 903. That's when you had to give up the ghost. Once it went back below 903, it had a nice 25-cent rally off of that, but that's all it got. And maybe it'll turn from here. But the problem is that the pattern that we had set up for the beans was so perfect that you literally had to go with it. And if it didn't work, you just got to get out. And that's not working. So stand aside and look at something else. This is the problem, because if the pattern doesn't work, it's going to go the other way. And we're seeing pretty big deflation everywhere. Even our crude oil that we talked about on Friday, the fact that it was rolling over, we had the divergence between the gasoline futures and the heating oil and the crude oil futures, and all of those have rolled over. And we mentioned that the heating oil was by far the weakest, and that's the one you wanted to be looking to sell, and that's the one that's really getting hit the hardest nowadays. So this is some of the things that we're seeing is this deflation across the board, because this is the one thing that the Federal Reserve worries about the most, and that's deflation. That's the type of stuff that happened in 29 through 32. They don't want to go through that again, and I believe that's why they brought quantitative easing in. The $64 question is, what's going to happen when they try to unwind quantitative easing and interest rates are going higher? The market's already told everybody that. The $64 question is how much higher and what's going to happen to them, when they finally do start. It won't just be one quarter point rise. It'll be a series of many quarter point rises where we'll get back to probably a 4 or 5% interest rate, nominal interest rate, as opposed to a 0.5% or 0.25% right now, which has been artificial for so very long. So these are the things that we want to keep in mind of what we're watching here early this morning during the time. Now we got a break coming up here. Stocks are still under a great deal of pressure. We'll be opening here in about 10 minutes, and then we will go on. If we have any questions, it's 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, we're back, folks, and we have one of our good friends on the line, John from Philly. Are you there, my friend?
There I am. Thanks for taking the call. Larry, I wanted to dovetail with a comment you just made. You showed that observation about the sharp rally that occurred last week, just a couple of days, but giving it all back, and that potentially being quite ominous. I wanted to share with you just 3 facts of recent history. First, on April 27th, the NASDAQ Composite Index made its high for the year and high for this bull move at 51.19. Interestingly, about those facts of time and price, that price, 51.19, was within 13 points of the spike high top back in 2000. And time-wise, I just recall the conversations you had earlier in the year with Bill Ehrman, whereby he had highlighted strength and an expected turn April 27th, that very day. Then moving on to the S&P, the S&P made its high May 20th, which was within 2 days of that conjunction of a lunar new moon and a Mercury retrograde feature, and that 2134 was within 4 points of that very, very long-term 2138 level, which was the fib of 1618 expansion of that 2007-09 bear market. And then, lastly, June 9th, last week, was the first high-amplitude turn in the Bradley model, June 9th, since last December, right after Christmas, which happened to be a tradable high in the Dow. So now that we made highs on the 27th and May 20th, and we made a low, at least short term, on June 9th, if June 9th, if that low is broken, can you just speculate, given those facts and your vast experience, what would likely happen in that event?
I sure would, John. It brings a lot of memories back to me because I was always studying cycles going back into the late 60s, early 70s with the Foundation for the Study of Cycles with Edwin Dewey and Gertrude Shirk, and I was really interested in cycles, and I had thought I had a really good handle on it. But what would happen is you would get a cycle low coming in like we had on the 8th or 9th of June, and the market would rally really strongly for 5 or 6 days, and you would think that it was going to go up forever, and then in a matter of a few days, this was late 74, in August of 74 when this was happening, is the market would go up for 3 or 4 days, and then all of a sudden it would be lower than it was at that point. And what was occurring, and I wasn't aware of it, was a process of cycle development called high translation. In other words, when a bull market makes high translation to the right, it spends more than half of its time going up into the cycle. Where it's high translation to the left, it rallies very shortly into the bear market, much shorter than 50% of the cycle, maybe even only 25%. What I mean by that, if it's a 28-day cycle, it will only rally 6 days and then go down for 18 days. So that's how that occurs, and that's why I'm looking at this particular phenomenon that we have right here as that happening. Because if we go below those numbers of what we made on the 8th, that's going to be really negative from my point of view. And maybe it'll turn and go back up and make new highs. If it does, then the theory doesn't hold water. But right now, if that happens, that's what you would be watching for a potential move to the downside if that should happen to occur. Does that help you at all? I mean, that's stuff from
that's stuff. Yes. And last week's low on the S&P, I'm just looking back, that was, I remember it vividly on the Dow, it was 17,720, and on the S&Ps was 2072. I'm just curious, do you have any targets that jump out at you in the event that those lows of last Tuesday, June 9th, are taken out? Is there anything that comes to mind?
Yes, you would make an ABCD pattern going from the high, that we made back on the 18th of May when we had Mercury retrograde. Then we came down into Mercury direct, pretty much rallied into Mercury direct, I believe, into the 10th. That would set up your ABC. And so if you measure AB and then look at what CD would be, and since it broke it so quickly, you would expect the CD leg to have at least 1.27 of the AB leg, and that would take the S&P down somewhere between 2030 and 2020 is what my calculations say that it could do. Now we're trading at 2071 right now, so that's certainly in the ballpark of doing something like that. So, John, we have to take a break here. You want to stay with us, and we'll finish this up when we come back from the break?
Very good, Larry. Thank you.
You bet.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Mr. Z, John from Philadelphia. John, are you still there?
I am, Larry, and I see we're getting accelerated selling right here since the 9:30 a.m. cash open.
Yeah, the first 4 minutes, you know, everybody, it's in, let me in, now it's let me out. You never know what's going to happen. Anyway, John, I wanted to mention to you about the cycles because, you know, I studied that stuff for many years, and this was back in the early 70s, and Edwin Dewey at the time said that he thought that these things were astrologically based, and of course I had no idea what that meant. It took me another 15 years before I met Dr. Miller. But the key to this is that you really never really know for sure you know, what is the trigger mechanism of the thing. That's where pattern recognition comes in to try to protect you, because you know everybody's you know, a lot of people search for the Holy Grail. I quit looking for it many years ago because I found something that, you know, worked relatively consistently with the Gartleys and butterflies and the patterns that I use. So that's my stalwart to look at. But with the cycles, they are astrological. I really believe that, because you just see too much evidence when you're seeing things like we looked at with what Norm Winsky pointed out, of course, with the Mercury retrograde, Mercury direct, the Bradley things kick in occasionally, and then we're also watching, you know, full moons, you know, and new moons. So those are the little things that I try to do, you know, just to add to it where we might be. But
yes,
basically comes down to pattern recognition.
Gotcha. Very good. I would only share one thing with you. I just can't help but be having on the forefront of my mind the fact that this S&P high that occurred on May 20th, having occurred 6 years into a very, very large bull market, occurred right when price was nearing that fib expansion mark, using the tool you've taught, and that time, that unique lunar new moon Mercury retrograde conjunction was exactly the same cycle event that occurred on October 11th, 2007, when the S&P topped that year. So I just wanted to tell you that is influencing the side on which I'm speculating upon. So I appreciate your discussion. We'll take it one step at a time then.
That's all we can do, is one step at a time, that's for sure. Now, John, keep us informed of the things you're looking at, buddy, because I watch the trades that you're doing, and you're really a real professional. And I certainly like, we've been friends for quite a while, but I love watching the stuff that you do send me, because if I happen to be on the other side of that, it really makes me rethink what I'm doing. Not often but that does happen. And but I appreciate your input into this. So thank you very much for contributing to TFNN like you do. And it amazes me every day when I come in here to see the smart folks that we've got here in the Tiger Room, and boy, it's really a big advantage to someone that works their own shift all by themselves, wherever they're trading, either in Arizona or wherever it happens to be. Little bit of help here and there never hurts anyone.
Larry, rest assured, I'll continue to do so. Thanks for your time. Good trading to you today.
Thank you very much, John. That was Mr. Z from Philadelphia, folks. Okay, we've got some more things to cover here. We have broken down. We have not taken out those highs yet, or excuse me, the lows yet of last week, which is a very important thing. But I did want to bring into to remind you folks to watch the crude oil, because we've come down and we made the 61% retracement in crude oil early this morning, down at the 58, just under 59 and change, and we've made that big ABCD in the crude oil. So that has certainly completed that pattern. And as I mentioned before, gasoline and heating oil are, especially heating oil, is far, far weaker. And gasoline is also giving up some of its gain. In fact, all commodities are getting hit, with the exception of gold. Gold still has a pretty good spot to look at it. We have a question from someone in the den about sunspots. I think the best thing you could do would be to go to Google it, because there's some interesting papers that I've written with stock market and sunspots, but I've never really studied it very much, because it's really not any way of looking at the thing, because you don't know when they're going to occur. You don't know when the explosions are going to happen on the moon or on the sun. So that's why I don't use them. I do the simple things. I watch conjunctions, oppositions, the things that were in the Bradley book, and the things that my good friend Dr. Miller told me. Those are the ones that I'm watching, because when those come together, that gives me a pretty good shot to look at it. That's one of the reasons why I have some of these guests that we have in our show here, because they're very, very smart folks that are, consummate astrologers. I'm talking about, Norm Winsky, Arch Crawford, Bill Meridian, Victoria Martin. I mean, these folks, their whole livelihood is astrology, so they certainly know it better than I do. So I rely on their expertise to try to filter out some of the things that I'm watching. So we had the Dow down here about 160. It's starting to hold here a little bit, and we'll see if that's going to be much of a factor in the market as we go through the rest of the day here. We have not taken out those lows of last week. I think we will eventually, but we'll have to wait and see. What's interesting is the DAX index in Germany has stopped at the 786 retracement, almost exactly where we were just last Friday. We made a 786 retracement of that, and has been rallying very strongly as the S&P has been breaking. So whether that's going to be a tip-off or not, we'll have to wait and see. We're in the midst of a pretty good rally in bonds and notes. Also, the euro has had a little bit of a bounce. We're still basically down on the day, given the fact that the news is the same baloney that they're trying to feed us as they go through the process of trying to figure out how the Greek is going to pay the debt that they can't pay. But that's neither here nor there. Once a person owes you enough money, they're no longer a creditor. They are your partner. Just remember that. That's important to keep that in mind. So we will be searching for these lows, I believe, here in the S&P and the Nasdaq, relatively sometime today, I would believe. Whether they're going to have much of an application to this stuff or not, I'm not sure. But it does look that we have some things headed to the downside. If we take that low out that we made last Tuesday before we had the big blow off, that is incredibly bearish, folks. That's high translation, and that means that the cycle topped 2 days into it, and that means you're looking at probably 2 to 3 weeks of some real severe pain in the market. Now, the VIX index is not giving you any sign that could be happening. And the other thing is that we have the banking index is still right at new highs. We got the IWM, the Russell 2000 is right at new highs, and the IBB is also at new highs. So you got some things there that are telling you there are a lot of people out there that are complacent and not scared. And why should they be? I mean, the thing goes up forever, and maybe even longer than forever. Who knows? So these are things that you want to keep in mind. But one of these days, it's going to roll over and it's going to cause some pain. So don't try to stand in front of it. It'll give you a nice chance to come in and pick a good spot to, get into the market. Again, we've had a heck of a run. We've had a really big correction in this market since 2011. It's only been one other market, I believe, in the history of stocks that has been that long without a 10% correction. And this will be a lot more than 10%. This is the Flying Melinda for me. This is the this is the Triple Crown. This is the Kentucky Derby, Preakness, and Belmont all wrapped into one, because this old cowboy ain't never going to see a top like this again in his whole life. So we'll see if we can enjoy it and see what the market will give us as we move on down the road here. Wanted to mention the dollar index has still got a chance to rally strongly from here. The euro had a little bit of reaction of the euro exit, the news that came out, but that's pretty much, what was happening with it. I personally believe that the Dow theory is still into effect, with the Dow Jones Transportation breaking down and the Dow Jones utilities, busting out of that pennant to the downside. That's also a very negative thing to be watching. So keep that in mind. Unfortunately, today is a very important day in the family, and I have to leave you folks here at TFNN because we have to catch something to take us somewhere, and I have to get out of here right now. So live every day in an attitude of gratitude, and may God bless.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch